Hi everyone. I'm doing cash flow sums specimen paper 2025. This is the optional question, and they always prefer that you follow this optional question where the format of the question looks something like this. But before you go to the question, you always have to read the questions and do your marking. Doing your marking is essential. After doing the markings, the first thing that you do is you prepare a rough format in your paper, which includes the following things. What are the things? You will write section A, section B, and section C, which says cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Your cash flow from operating activities should have these five things. What are the five things that we are looking at? Net profit before tax, operating profit before working capital changes, cash generated from operations minus the tax paid. What will you get? Cash flow from operations or cash used in operating activities, cash flow from investing, cash flow from financing. Okay, keep this in mind. Then you take one item and you start putting it. Okay, alternatively, you can also do your marking. Okay, net profit before tax has your working note number one, which is very important to do. It's net profit before tax and extraordinary items. Let's start reading the question. I have my share capital over here. Share capital looks intact. You should know that this goes in financing activity and the reserves and surpluses goes in working note number one. Share capital looks intact. That means financing activity would not have any changes in because of the share capital. Okay, keep that in mind. Financing share capital goes in financing activity, reserves and surplus goes in the working note number one, and sometimes your reserves and surplus would have a note to account. Now, if I see my reserves and surplus, the closing is 80,000 and the opening is 60,000. So if I do my closing minus the opening, that is 80,000 minus the 60,000. Let's go and check. When I go to my reserves and surplus, I know this is a part of my working note number one. Working note number one will give me my net profit before tax and extraordinary items. So when there is a reserves and surplus, I'm going to make my working note number one. Profit as per the reserves and surplus, so it is closing minus opening, so it would be 80,000 plus 60,000 because it's minus of minus 60,000. So my profit is 140,000. Okay, I'm not doing anything right now. I'm just reading, analyzing, and putting. Non-current liabilities. Non-current liabilities refers to your financing section. So you should know about this. This is financing. This is financing. However, this will go in your working note number one. So non-current liability, look at this. First it was 2023, it was 150. Now it has become 100,000. That means there is a repayment of your long-term borrowings. It has reduced by 50,000. So keep that in mind. This will go in your financing activities. It has reduced by 50,000. That is perfectly for clear. Go and read some other information if there is anything related to long-term borrowings. Long-term borrowings. There is an interest on the borrowings that is due and paid. Before I discuss about this interest on borrowings, I would first go and write in my financing activity, payment of long-term borrowings. So any payment of the long-term borrowings and the interest on the long-term borrowings both becomes a part of financing activities. You've paid the long-term borrowings of 50,000 and there was an interest on the long-term borrowings of 25,000 and this is paid as well. So this is your non-operating activity. Interest on the borrowings is your non-operating activity, 25,000. Non-cash, non-operating activity. Non-cash, non-operating activity is added over here. Non-cash, non-operating expense is added. And what is deducted? Non-cash, non-operating income. So this interest on borrowings. 25,000 will be added. I am just reading and putting. Just reading and putting. Now, short term borrowings, which is your bank overdraft, you have two options. Because of this bank overdraft, you're getting some finance. You can treat it as financing activity, or you can treat it as cash and cash equivalent. We will treat it as financing activity, no problem. If you see your bank overdraft is increasing, how much is this increasing by? This is increasing by 153,000. That means I am getting the money to use as 153,000. I will go and write this in financing activities increase in short term borrowings, bank overdraft. Because of this, you are getting money to use. It's an inflow for you. Money to use. Finance you are getting. Financing activity. Okay. Now you come to your tax. Tax is always a very sensitive item. You have opening provisions, you have closing provisions, and you have tax paid. Okay. You better make an account when you have more than two things given for tax. And this account you need to memorize how to prepare it. So as we said that whenever there is tax, you will prepare a provision for tax account. So if I'm making a provision for tax account, the provision for tax always has a credit balance. Opening balance on the credit side, closing balance on the debit side. Whatever tax you've paid will come on the debit side, and tax for the year, the provision for the year would come over here. There are two things that you always record in from your provision for taxation account. This is the bank and this. This would go in your working note number one, as we've already discussed this. This amount would be added to get your net profit before tax and extraordinary items, which is your starting point for your statement of cash flow. And tax paid comes at the end. At the end, that means over here. When you have your cash generated from operations, from that you will subtract your tax paid to get cash flow used in operations. Okay, now let's go over here and check the things for your provision for taxation account. So when I am making my provision for tax account, the opening balance of the provision for tax, that is 28,000, comes over here. Closing balance, which is 15,000, it comes on the debit side. And I have the tax paid 20,000. Tax paid, you will directly write over here minus 20,000. Okay, now we talk about the taxation for the year. So this is 35,000. 35,000. From this 35,000, when you are going to subtract 28,000, 7,000 is your tax for the year. And where does this tax for the year go? It goes in your working note number one, which is your net profit before tax and extraordinary items. So you will add your provision for tax current year, which is 7,000. Now, if you observe very carefully, we've just read, accumulated the information, and we have put the things. Share capital is a part of financing activity. Reserves and surplus, working note number one. Borrowings, financial activity, and any interest on these borrowings would be again financial activity, and it is a non operating expense. You should note this. Bank overdraft, it is going to give you money, financing activity. For the provision for tax, you make a provision for tax account, and in that two items would come the tax paid over year and the tax expense for the year in working note number one. With this, what are the things that we have completed? We have almost completed the equity and liability section and all our working notes. Interest on borrowings is also incorporated for. Now we come on the non-current assets. This all the non-current assets are investing activities. There is no information that is given over here. Let's take non-current assets. Opening was 640, now it has become 550,000. That means your asset is sold. Okay, so asset is sold, or maybe there is a depreciation on your plant and machinery. Then you will go and check, is there any information given about your sales of the asset or not, purchase or sales. I see there is no information given about purchase or sales. So this decrease in the value of your asset is your depreciation of the asset, which is 90,000 decrease, and depreciation of the asset is non-cash expenditure, so it is added. So depreciation on your property, plant and equipment is 90,000. Non-current investments, if I see there is an increase in the investments, how much is the increase in the investments? 140,000 minus 50,000. There is an increase in the investments of 90,000. So I will write purchase of non-current investments, which is 90,000, which will lead to an outflow. Whenever the percentage is given, that means you have to calculate interest. Number one. Second, the date of your investments has to be given. If the date of investment is not given, then interest on investment will be calculated on the opening amount. So they have said that you have purchased this investments on the last date. So interest on investment, that is interest, you have purchased investments. So investment in debentures is 19,000. This I've done. And interest on these investments, it's hidden. It's 7% of 50,000. The date of investment was given. Even if the date of investment is not given, you would still calculate on 50,000. So this is 3,500. The interest on your investments, and interest on investment is again which activity? It is non-operating activity. It is a non-operating income. So you are going to subtract this interest on investments. So anything in your non-current asset is in an investing activity, and any income that you generate from it, any income generated from it is what? Non-operating income. Any non-current liability is a financing activity, and the interest that you pay, it is a non-operating expense. You should keep this in mind. So your interest on investment is 3,500. Cash and bank balance. Opening cash and cash equivalent would come over here, 280,000. Let me check properly with the columns. Opening is 50, closing is 280. Opening is 50 and closing is 280,000. Your main answer should arrive at this. We've done discussing everything. Now, what you have to do is just close your working note number 1 and complete the sheet. So this becomes 147,000. Your working note number 1 figure goes over here. And now you just have to complete your sheet. To complete the sheet, whatever I'm writing in green so that you know about it. So I have 147,000 plus 25 plus 90 minus 3,500. This is going to give me operating profit before working capital changes, and this comes up to 282 258 500. There is no current assets that is working capital for me given except cash and bank. So this would become again my cash generated from operations. From that I minus my tax paid. I have cash flow from operating activities, which is 238 500. I will not draw a line because I'm going to use this. My investing activities, cash flow from the investing activities is 90 minus 3. It's a negative amount. It is cash used in investing activities, 86 500. I will write cash used in investing activity. Then from financing activity, there will be cash flow from financing activity. So this is a positive 78,000. So when I do 50 minus 50 minus 25 plus 153, I get a positive 78,000. Now I'm going to add these three figures. Which three figures? Cash from operating activities, investing activities, and financing activities. I have a positive amount of net increase in cash and cash equivalent, which is 230,000. And 230,000 plus 50,000, I am getting a closing balance of closing cash and cash equivalent, which suggests that my answer is completely correct. Just to brief you again, share capital financing activity, reserves and surplus working note number 1. Financing activity and any interest on it will go in financing and non-operating expenses. Financing activity, any interest on it will again go in financing and non-operating expenses. For provision for tax, I prepare a separate account. Investing activities, but you should keep four things in mind: purchase, sales, depreciation, and profit and loss. Investments is again investing activity. Income from it is investing activity and non-operating income. And this would go at the end. So this is all specimen paper 2025 ISC question 13. This was an optional question.